Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So around this time every single month we look forward to the next month. We look for companies that are undervalued. We're looking for high quality businesses that are undervalued that we could potentially add to our portfolios, that are Sharia compliant and so on. And that's exactly what we're going to do. I have 5 different companies that are very exciting, and inshallah I'm going to share with you guys the financials and everything you need to know about these companies. As always, of course, this is not financial advice, so please do your own research and so on. But before we get to the video and we look at these 5 different companies that are undervalued, I would like you to join us in the Patreon account. The Patreon account gives you access to a Discord of community of people that are sharing good practices. You get access to the buys and sells that I make. You get access to the family portfolio, the dividend trackers, the dividend calendar spreadsheet, the watch list, which I've now updated. I'm going to share with you guys in the next couple of days. You got the ETF tracker, and then you got Sharia compliant investing ebook. And recently I've included a 5-page basically long document where I talked about why I love dividend companies and the importance of them, and then so on. I've included other information that are, especially if you start in your journey for basically building a new portfolio. Okay, so that's basically all in there. It will cost you about 15p per day, and I'm sure you get a lot out of it. Even if you join it for the first month and then see how it goes, you take it from there. Now what we're going to do now is just have a quick look on the S&P 500 and the rest of the indices, how they've actually performed for this month. As you can see, it's about 4% when it comes to S&P 500. About Dow Jones is about 2%, so 1.4%, sorry. And the 5% for the Nasdaq. FTSE 100 is almost flat. Now for 6 months, the year to date is actually slightly different. You got 16%, 4.5%, 21%. So the Nasdaq is actually done really well. Now I need you to take this into consideration when you're looking at this. Okay, these are just not numbers. Okay, they are really important, the numbers, and it gives us a really good information. And what I mean by that is, on average, we expect the S&P 500 to return 7 to 10% on average. What that means is, over a period of time, 10-15 years, you expect the S&P 500 to return about 7 to 10%. Right now, if the markets were closed, okay, if the year finishes right now, the basic S&P would be returning about 16%, which is really good. And this is not a total return, by the way. This is just the price. So basically price appreciation, if you include the dividends, will probably be slightly higher. So that's really important. When you see these numbers, take that into consideration of what we expect from the S&P 500. Next year, we might be down 14%. Okay, but on average, over a period of times, 10-15 plus years, we expect about 10 to 15%. And that's the important part, because a lot of brothers, when I talk to them, you're like, okay, how much can I actually make? Well, you can make basically negative 15-20% this year, and you lose 15% of your portfolio, and the next year you could be up 20%, and so on. But what you're looking for is the longevity of these things. Okay, so the long-term plan is to make sure that you are invested so you can actually benefit from that compounding effect, inshallah. Right, so this out of the way, let's now have a look at one more thing, and that is the Fear and Greed Index that comes from CNN. And recently we were here. So right now things are heading towards the green area, if you like. So this is kind of neutral right now we are. So soon we might be in basic greed, or go back to fear. But we are closer to the fear side of it. What this tells us basically what the investors are feeling right now. So right now they feel like, okay, the market is okay. We're not worried about a lot of things. A few weeks ago, everyone was worried about a lot of things, and that has now improved. And we will fluctuate between here. But what's important for me is I don't really care too much about this. I use it to my advantage. If there's a lot of fear and extreme fear here, I buy more stocks, because I know in the long run, okay, we will be absolutely fine. I don't worry too much about it. So this is kind of the day-to-day, the weekly, whatever overview of the markets, but it does not actually dictate whether I buy or not, because I'm always a net buyer of stocks regardless of whatever happens. Now let's have a look at the 5 companies, inshallah. And as usual, we are looking for the same information that we always look for. This time I've highlighted the moat of the companies, because every single one of these companies has a wide economic moat, which means basically they have things like pricing power. When it comes to their basically product, there's not a lot of companies out there that can take market share away from them just like that. Okay, It could be the factor that there's a higher switching costs where other companies cannot go easily to another company because they've already invested so much time and effort into being with these companies and so on. So take that into consideration when you're looking at this. And we also highlighted the Morningstar valuation and the fair value of this, because all of them should be either fairly valued or undervalued at this point in time. Right, so the first company we're looking at today is Hershey Company. This is one of the companies I do own in my portfolio. Currently has a market cap of $37.6 billion and it has a wide economic moat. Now, if we look at the company, as you can see, a year to date is actually about 1.4% down, but for the 1 year, okay, is down almost to 29%. And like I've said to you guys in the last few videos, and so every time we talk about this company, is because the stock is down a lot because of the cocoa prices actually gone down. And for that reason, the company's margins might not be as great. But is that going to continue forever? I don't think so. And for that reason, I am actually still buying, and I'll show you exactly in a second. So price right now is $184 per share. Dividend yield of 3%. The payout ratio is 49%. Latest increase was 15%, which is really good, and the 5-year growth rate of 10%. So this is really huge. This, for me, this is important. I'm investing in these companies hoping that they will continue to increase that dividend for the following whatever years. Dividend streak, basically we're looking at file now 14 years, and annual payout $5.48. That's what they will pay you for every share of this company that you own. Safety is 80% right now. The revenue growth year over year is about 8%. The 5-year EPS annual compound annual growth rate of 9%. Profit margin 18%. Return on equity 54%. Let's call it 55%. Return on invested capital is really wonderful, 28%, which is really huge. This tells me the company's management are doing really well. Profitability is fine. We just need to basically get over this situation that we're in now with the price of cocoa. Free cash flow right now 1.3. Total return the last 10 years about 8%. Growth estimate next year is about 2%, and then 2% after that. Now, is this going to continue forever? Of course not. This will definitely change, hopefully for the better. 13% discounted right now, and $210 per share is where they think the price should be. Now, the next one is Nike. This is one of the companies that they just reported last night. Actually, I think I'm going to show you in a second. Okay, 142 billion market cap, and they do have a wide economic moat. So they've reported just last night, I think, and they're down about 18, almost a 19%. Which is absolutely huge. That's about $18 right now. A year to date, they have down about 30%, and for the 1 year it's about 17%. Current P is about 25 right now. Now let me have a quick look. Let me show you. So this was yesterday they've reported. So let's have a look. So they missed EPS. It was a beat, just a beat. Okay, so about 17 cents. And when it comes to revenue, it was down. So it was year over year, it was down 1.7%, which is basically 250 million miss. And I think that's a lot to do with that, as well as, of course, they guided slightly lower than what was expected. Add these two things together, and that's probably why the stock is down so much just today. So there are other articles here. If you are a subscriber on Seeking Alpha, have a look at that. I have no affiliation or anything like that, but yeah, so it's down quite a lot just today because of what they've reported. I'm not sure if they have actually financially, if they've updated this. I think in the next 24 hours this will be updated massively, because right now if we just look at quarterly, I think they probably have updated. So next quarter they're expecting slightly higher, but when it comes to the one after that, so that's going to impact what they were reporting at the year. So they probably think, okay, we will be all right when we report in May of 20. Wait, this was May 20. So this is basically what they just reporting, I think, and this is probably isn't the next one. Anyway, whatever it is, it will come out. And for the 1 year, as you can see here, 15%, and then basically negative 2% for the following year, and so on. And then the following year is about 10%. So it's not dead. Okay, and we know the company, and there are now, if you analysts and if you people that came out and just said they need to get rid of the CEO, because since he's been in the company has not done they've done absolutely nothing for the last whatever years. In fact, if we look at their price for the last 5 years, okay, they are actually down about 8%, and for the last 10 years the company has actually done about 10%. I think for the 5 year the S&P 500 is up about 87%. I think that's what it is, right? Because we were looking at it earlier. Let's go back here and go on last 5 years, just looking at the S&P 500. Yeah, 87%. But this company has actually done absolutely nothing for that period of time. But so it might get over that situation if they get rid of the CEO right now, because remember, Nike is one of the biggest companies out there. And in fact, if that CEO goes and there's a slight change, this could be a wonderful turnaround company. So price right now $76 per share, dividend yield of 1.6, payout ratio almost to 40%. Latest increase was about 9%. The 5 years about 11%, and 21 years of increase in it. Now soon they're going to become dividend aristocrat, which means in 4 years this company will become a dividend aristocrat, which is a company that have increased that dividend for 25 years and plus. Annual payout right now is $1.48, safety 99%. Late in terms of revenue growth rate of basically year over year is about 7%. Last time for the 1 year anyway, and for the 5 year EPS is about 15%. Profit margin 11%, return on equity 40%, return on invested capital 21%, and free cash flow $6.1 billion, which is quite nice. And total return the last 10 years about 10%. Growth estimate next year 4%, then 11%, almost 12%. Now this is basically I put this together yesterday, so we will see where basically what happens, what's Seeking Alpha. In fact, we can check that now. So it looks like about 12%, and then about another 12% for the next. So I'm not sure if, I think this is getting updated as we speak. So that's 12%, and then that's almost 12%, and this is what we see here. So this is now have been updated to about 12%, and that's almost about 12% as you've seen here. There you go. So yeah, so that's still changing data, because as soon as the company reports, these things do start changing. Yeah, 27% discounted right now, $129 per share is where they think the price should be. The next company we're looking at is TSM. This is one of the biggest companies out there and most important companies out there. 64 billion market cap, wide economic moat, $175 per share. The only issue we have with this company, by the way, is if you live in the UK and you cannot buy this company through your ISA account. That's the only issue. But it has a nice dividend of 1.4, payout ratio only 42%, 14% increase the latest. The 5 year is about 10%, and they basically don't increase it every single year, so they don't really care too much about this. Annually they will pay you $2.46. Safety 82%. Revenue in terms of year over year growth rate is about 18%. The 5 years for the EPS about 16%. In terms of profit margin, 38%, 25% when it comes to return on equity. Return on invested capital about 20%. Free cash flow almost to $7 billion. Total return the last 10 years about 24%. Expected to grow about 26% this year, then 22%, 90% discounted, $213 per share is where they think the price should be. This is a really high quality company, and considering what's happening with the AI, this company is definitely going to benefit from it, because when Nvidia designs these chips, they then have to send it to TSM, then TSM manufactures it. That's it. So they gonna basically, without this company, Nvidia will not be up right now as much as it is, and so on. Next one is Air Product and Chemicals, 58 billion market cap, wide economic moat, $261 per share right now, on 2.7% when it comes to dividend yield. Latest increase was 59%. Payout ratio 59%. Latest increase was 1%. The 5 year growth rate about 10%. 41 years of increase in that dividend. So another 9 years or so, that will become a dividend king. Right now they're dividend aristocrat. $7 is what you will get for every share you own. 95% when it comes to safety. Revenue at about 10%. The EPS is about 8%, profit margin 20%, return on equity 17%, return on invested capital 8%. Right now they have a negative free cash flow right now, and I think this is something that the company is actively working on. So I'm hoping that, because I do own the stock, I'm hoping that next couple of quarters we will see this is likely to decline, and hopefully will turn back to a positive free cash flow, which they had for quite some time. Total return the next year, but then again, even though this is happening, in terms of safety, it's absolutely no issues, because the company still has a really good solid growth in terms of revenue side of it. 10% total return the last 10 years. Growth estimate next year is about 10%, 7% after that, 13% discounted, $303 per share is where they think the price should be. Right now it's $261 per share. Automatic data processing is another one, 97 billion market cap, wide economic moat, $240 per share. Dividend yield of 2.4. 59% when it comes to payout ratio. Latest increase was 12%. dividend in terms of last 5 years, they've grew that dividend about 14%, which is really huge. One more year, this company will become a dividend king. Annually, you get $5.60, 97% safety. Revenue grew about 6% in the last 5 years, the year over year, sorry, and the last 5 years when it comes to EPS, we're about 11%, which is really nice. 20% profit margin, 88% return on equity, and 61% return on invested capital, which is absolutely huge. $3.4 billion of free cash flow, total return 14%, and growth estimate next year 9%, 10%. Fairly value right now $240 per share is where the price is. Now, looking at Sharia compliance side of things, you can pause the video. There's absolutely no issues with these businesses. I've actually owned basically this one here, and this one here. So just to be transparent with you guys, as you can see, this is actually my my fourth biggest holding, about 5%. Product and chemicals, automatic data processing as well, over £4,000 there. And then when it comes to Hershey, I'm just done about 1.7%. So those are the three companies that I own and will continue to own and add to in the InshaAllah in the next coming months, if it continues doing this. Especially this one here is quite still undervalued, okay, and I'm down quite a bit, so I will be doing that. And this one is now coming back down again. It's only 1% difference between what I had, so I wouldn't mind owning another 5 shares or so. So InshaAllah I will continue doing that. I will be sharing that with you guys, InshaAllah, on the on Patreon account. If you have not joined us, please do so. Like I said, always, it costs you 15p and you get a lot out of it, InshaAllah. Have a wonderful day. Assalamu Alaikum.